Hey, what's up guys? It's Sam with the Humble Outliers, and today's video is on a deeper dive on the stock McDonald's, ticker symbol MCD. Hope you guys are holding up well out there. So let's look and see if this is a great long-term stock to hold for investors seeking dividend growth and stock appreciation. McDonald's is known for its high dividend yield, providing investors with consistent dividend cash flows, outstanding fundamentals, and strong free cash flow. I feel like every time I drive by McDonald's, there are tons of people in line and ordering. I personally love the Big Mac. It's one of my childhood favorites, so let's dig into the stock. But before we start, please smash that like button down below and subscribe if you haven't already. I recently hit 50 subs. I just want to say thank you. It truly means a lot. And a quick disclaimer, please remember to do your own research when picking stocks. I am not a financial advisor, and this is meant to be for entertainment purposes only. If you can see here, my portfolio is doing pretty down right now. But with that, there's a lot of opportunities to add shares into companies that you've been looking at. One of them that I'm looking at right now is McDonald's. All right, and the tool I'm using today is M1 Finance. With this market downturn, unfortunately, I don't have much cash to buy, but I do have a way to buying stocks still with fractional shares with M1 Finance. So if you're not aware, fractional shares mean that you can buy a portion of a share of price of McDonald's with whatever amount of money you have. So if all of you have is $100, you can buy into that fraction of share. But let's look into the stock McDonald's. So as stocks go lower and lower, we are going to see companies get exposed who are not best prepared for this economic climate, especially if this virus is not contained for a while. Companies will need massive cash to stay afloat and a wide moat to protect their business. The economic impact on earnings could hurt some more than others. McDonald's, MCD, has increased its dividend yield for 43 years consecutively, making it a solid long-term investment for dividend investing and consistent income for those looking to put their dividends to work to maybe pay bills at some point or something else with that money. A couple of key highlights I wanted to point out from the recent fourth quarter earnings call was McDonald's hit $100 billion in system-wide revenues in 2019. Its global comp sales grew by 5.9%, which was McDonald's best growth number in 10 plus years. Also, in the US market, they grew comps by 5% in 2019, which was their best in 13 years. I think that's pretty impressive considering how big McDonald's is. It's one of the biggest it is the biggest fast food chain in the world at 132 billion market cap currently. Its PE ratio is fair at 21.6 right now, especially with how things are going in the market. So if you're looking or considering a stock that you are going to be buying and holding forever, that type of stock, something that you don't have to babysit, you can rest assured that McDonald's is consistently going to hit its earnings, which it has done. Also, it continues to grow its yearly dividend yield, which is currently at 2.94%, and it has a huge cash reserve of free cash flow at $4.68 billion. Now, let's look and see what Morningstar an analyst for them recently wrote about McDonald's Corporation, MCD. This was reported on March 9th of 2020. You can see that they're talking about the wide moat of McDonald's, which got off to a really strong start with comps growing at 5.9% in the 5.1% in the US, restaurant margins increasing 40 basis points to 17.9%, and operating margins improving 140 basis points to 42.9%. We believe these results are a result of McDonald's velocity drivers, experience of the future, digital and delivery, and streamlined operations. Nevertheless, the key question facing McDonald's is whether it can maintain its momentum in 2020 and reignite U.S. comparable transaction trends. Guest counts fell 1.9% for the year, but remain ahead of industry average guest count declines of 2.8% using data from Black Box Intelligence. Industry promotional activity and escalating breakfast competition are a risk, but we still identify catalysts to drive transaction growth for McDonald's US in 2020. At the top of the list are new menu innovations, including the new chicken breakfast sandwiches, premium fried chicken sandwiches, which have reportedly performed well in regional tests, plant-based burgers. In addition, new delivery partnerships, which helped to drive $4 billion in system sales during 2019, increased deal promotions, and better targeted digital offers should help to drive nominal transaction growth when coupled with incremental ticketed benefits of EOTF and dynamic yields suggest drive-through ordering technology. We expect consolidated comps between 5 to 6% and roughly 5% in the US in 2020. based on fourth quarter outperformance and increased confidence over the near-term sales trends, but partly offset by a planned 5 to 7% increase in G&A expenses in 2020, including technology investments, operating expense increases for dynamic yield, and costs tied to biennial franchisees conference. We're planning an estimate of 220 fair value. While we still prefer a wider margin of safety, we still view McDonald's as one of the industry's more resilient growth income stories. So what's your guys' thoughts? I'm personally long in the McDonald's stock. This market downturn has made me excited about buying quality stocks to add to my long-term portfolio. I'm looking to acquire solid dividend growth companies so that I can increase my cash flow and someday be able to use those to pay bills. But until then, the journey will be fun to build that awesome portfolio, right guys? Let me know in the comments below your thoughts on McDonald's. Is there a food chain restaurant that you prefer? Thanks for watching. Have a good one and stay humble, outliers.